This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, I'll be going over the data sets, the earnings, and doing a technical analysis over the SPY, oil, precious metals, treasuries, including the corporate credit, the FX market, and going over Bitcoin. And just a reminder, I will be streaming Monday, Wednesday, and Friday. I did change the times up a little bit, so I did say from 8 a.m. to 8:30 to 9:30 a.m. Excuse me. I changed that time to be 9 a.m. to 10:30 a.m. It just works a little better, and this way we catch the actual open. We can go for some scalps, things like that. So for now, we're going to be doing the Monday, Wednesday, and Friday, 9 a.m. to about 10:30, 11 a.m. Eastern Standard Time. So with that said, let's go ahead and jump into the video. And just to jump into this before we really start the video, we are going to be covering quite a bit tonight, so I will be timestamping everything. Um, Even though there's a lot in here that we're going to be covering, I will be going over it fairly quickly. I'm only going to be covering the most important aspects of each of these. So, um, grab a pen and paper and let's get into it. I've had to record this segment probably 10 times now, so we're just going to quickly get through this. Monday, really not an important day. We have the New York Fed 1 year consumer expectations. Those should very likely be coming in cooler. The consumer expectations overall have been very, very low overall. Tuesday, not a very important day either. We have the ADP weekly employment change, which I do expect to start coming in a lot lower than what it has been. And I do expect it to start actually pulling into the negatives, but I will cover that in the Treasury section. The 3 year note auction, I do expect the yields to pull upward very, very slightly due to the short-term oil volatility with the conflict. However, overall, I do expect the yields to be pulling downward. So if the treasury market is, in the same consensus with me, then we will see these auctions have a lower yield. But if the conflict is going to overshadow that, then we will be seeing these yields pull up very, very slightly. So don't really expect a whole lot from those one way or another. On Wednesday, 8:30 a.m., this is really when we do start having important data this week. We have the CPI data. Now, the forecast has it coming in slightly hotter. I don't expect that at all. I expect it to come in basically neutral or slightly cooler. So we will see how that turns out. But overall, we've been seeing a lot of this data just coming in cooler and cooler and cooler. A lot of these revisions have been coming in, um, you know, having to revise it downward. So CPI, I really don't anticipate this being as high as they expect it to be. And what else on Wednesday? We have the 10-year note auction, and the same sentiment with the 10-year or with the 3 year on Tuesday. We might see the yield pull up slightly, but overall, I think the market conditions, the labor conditions, and the economic conditions really do lead to the treasury yields pulling downward. And very likely, once we see a lot of this oil volatility with the conflict settle down, then very, very likely we will be seeing the yields pull down shortly after. On Wednesday, we have the jobless claims and the exports and imports. Um, Really, the jobless claims have been holding very steady. I do expect them to start pulling up pretty drastically soon here. And by soon, I'm really expecting about 3 to 6 weeks out for this to really start hitting the system. And again, we will talk about that in the treasury section. Let's see. Yeah, that's it. That's the main part for the 8:30 time slot. Now at 11 a.m., we have Fed member Bowman speaking. Not too worried about what Bowman has to say right now. And at 1 p.m., we have the Atlanta Fed GDP now for quarter 1, and then we also have the 30-year bond auction. Now for the 30-year bond auction, again, this can come slightly higher yield, but with it being such a dated duration, we might see it actually price in this oil volatility, basically pricing it out of the system and more so pricing in the weakness that the labor market and the economy has been showing. For Friday, we have a ton of revisions coming in. So we have a ton of PC revisions for January. We have a bunch of GDP revisions for quarter three. So those extremely large quarter three, quarter four prints that we talked about much earlier last year, how we said, wow, those are absurd. We don't expect those to be what they are at all. They're anticipating the revisions on those to be far, far lower. Um, so very, very likely that would not be good for the market at all. The market has been very largely riding on a strong GDP, which again we've been discussing this for over 6 months now that the import numbers have been massively boosting the GDP in a false way. It's not a real number that you can attribute to a growing GDP. It's not growth. It's just basically idling cash into the GDP that makes it look like growth. So all these analysts and everybody have been talking about major GDP growth. It's just been the lack of imports. So um, very, very likely those revisions are going to be reflecting that because they're expecting it to come down quite a bit. Excuse me. Now at 10 a.m., we also have the JOLTS job openings for January. Every time the JOLTS numbers are published, the forecast amount is usually always very, very high compared to the actual number that comes out. So they're expecting basically an increase in the job openings. I disagree with that number. I expect it to be basically the same or less because we know that the economy pretty much has not been hiring across the board. So important week, it's mainly going to be the CPI on Wednesday and those revisions on Friday, though. Not really too worried about Monday's data, Tuesday's data, or even really Thursday's data. Nothing on those days are really going to push the current sentiment too much. So, with that said, let's go ahead and jump into the earnings. Now, for the earnings, we're only going to cover this very, very quickly. There's really nothing in here that I'm interested in this week. There's Oracle and Adobe, which are the big names for this week. However, I know that Oracle's been absolutely just been, you know, getting destroyed, and I have really nothing much to say about Adobe right now. So, um, that's this week. I want to kind of look at next week though. Next week we have nothing majorly important. So, we do have Micron next week, but yeah, so this week, nothing super, super crucial. Oracle, even though I've said this before about Oracle, I don't expect it to move the market a whole lot. This time I could say that with a little bit more certainty because now they're not going to get some $500 billion deal overnight. Now that that deal has been pulled and a lot of those different deals and contracts and things are starting to get pulled from Oracle. Um, I don't expect them to receive some, absurd funding out of nowhere. So, um, I have to say that because there was that earnings where I did say that, oh yeah, Oracle generally doesn't move the market a whole lot, and then it had that $500 billion deal, and I got absolutely smoked on some short positions for semiconductors. So, um, again, this can move the market, but my expectations are that it's going to be basically a nothing burger type of earnings, and very, very likely because they have been having to pull a lot of deals and everything, they will have to explain that within their guidance, and I'm not expecting great things out of Oracle this week. And yeah, that's going to be the earnings. Now, for the Fed Watch, I always try to cover this in every Sunday video. Again, for March, it's pretty much going to be a pause. We have a conflict going on. Usually when conflicts are going on, a lot of the system just tries to keep things steady. That means rates, um, currency, uh, yields, just all sorts of different things. They want to keep them held fairly steady because there's real implications from, real life conflict that can change the economy, whether it's a refinery getting destroyed or, a passage being closed off. Something real can affect the actual economy. So speculators and everybody really try to hold off a lot of their speculation and take on a lot less of that type of risk in terms of the overall market. They try to structure their risk more into chasing volatility, things like that. So, very, very likely overall, the Fed being a central bank, it wants to stay safe. We see the same for April. It's pretty much pricing out this um, odds of a 25 basis point cut. And again, we do have Powell being replaced, I believe, in May. So the likelihood of the Fed wanting to adjust the rates at all right now is extremely low. Extremely, extremely low. Now for June, we do start seeing this 25 basis point cut starting to be priced in, and that's after we have our new Fed chair, potentially any changes within the Fed. Very, very likely the conflict with Iran is going to be done and concluded by that point, because, those type of conflicts don't last very long. So very, very likely we do see this 25 basis point cut for June start to be priced in a lot further. But the next two FOMCs for March and April, I don't expect us to have a cut unless something massive breaks within the economy, which something absolutely can. I do expect the Bank of Japan to start unwinding positions very, very drastically once this oil volatility clears. Um, if that starts to occur, that can align with the Fed having to cut rates. So April, not completely out of the picture, but very, very likely this March cut is pretty much a 0%. I would be very, very, very surprised to see this happen. And again, that would only happen out of absolute necessity. So okay, let's get into the technical analysis because we have a ton to go over. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. All right, and getting into the technical analysis, we will be making this fairly quick tonight. So we will be going over just the basics of what's very, very crucial and important right now. So on Friday, we started the bottom Bollinger day one. Okay, and very, very quickly going over the Bollinger mechanics. If we have our bottom Bollinger close below the lower Bollinger, or the market price close below that lower Bollinger range on the daily time frame, basically at or below that lower Bollinger range, then the next session we expect a lower low, and from that lower low we expect the price to slowly start consolidating back up towards the 5 mile. Okay. This is a very common thing whenever we see these bottom Bollinger pushes actually occur. This is one of those. Push into the lower Bollinger. Day two, push even lower, and then slowly consolidate up to the 5 mile. See an actual lower Bollinger push in here. Harder to see because generally you don't see the market push into the lower Bollinger very often. Here's another example of that. This isn't day one right here. Day one started right here, pushed into the lower Bollinger. Day two saw a lower low, and from that lower low slowly consolidated back up to the 5 mile. So this is a back test move. It's something that happens with high consistency. So this is what we're looking for. Um, Looking for that lower low, and with the overnight is selling off pretty drastically. The overnight price right now is currently at the 658. It was down all the way to the 657, almost to 656 at one point. So, we're having a pretty large amount of selling here. Okay. I'm going to turn on the drawings, but before we go over that, I do want to say that the 5 mile will be pulling down very, very aggressively. Okay, because the market closed at 672.38 on Friday, it's extremely likely we see the 5 mile pull down all the way to that 677.40, 677.50ish range. It might even be lower because the overnight is selling off. If we hold anywhere close to that level towards the open, then the 5 mile could be pulling down even lower. So looking for the 5 mile to be start or to start really creating a new level to the downside. And what I mean by a new level, and I am going to turn off averages here. I do want to show the Bollingers just for a moment, but I do apologize for this glaringly white box. However, this was a major consolidation channel, okay? And we were within this channel for months and months and months, basically since November. Really, I attribute I can't talk tonight. Attribute it towards the middle of December. However, we really entered that range in all the way back, I guess at the end of October. So we've been within this range for a very, very long period of time now. We're finally starting to break this range. As of Friday, we closed below that range, which was the first time we've closed below that range all the way since what was it? I want to say December, yeah, December 17th. Okay. With us closing below that range, we have finally broken this consolidation range. So even put a little note there. Little notes help. I'm gonna keep these in the video from now on, but these allow us to just quickly go over some of the notes on some of these ranges. Anyway, hit that upper rejection range. From the upper rejection range, we were inside this long consolidation range, lasted again all the way from quarter 4 2025 till quarter 1 2026. It has finally been broken. With it finally breaking down, we have closed that major cup to the downside. I want to turn off the Bollingers here for a moment. And with us closing that cup to the downside, we are at a very, very crucial range of liquidity. And that was this 669.22. And this is why on Friday I was expecting us to actually potentially close below that 669 range. I mentioned 667 was, potentially within the cards because we had not only the inverse cup, but we had the handle fully closed down. And from that handle closing down, we expect the push downward. And I do want to pull up the drawing tool because the handle decided to delete itself. But with the handle closing, we do expect the push downward. And so far, the after hours are showing that, or the overnight is showing that we are starting to push downward. Now, I want to show the moving averages here for a moment because we're starting to pull down towards a very, very crucial moving average. Now, the overnight price is currently at 5, so I want to make sure to put it right there. So, with the overnight price starting to pull downward, we're starting to close an even larger inverse cup to the downside. And that's this cup all the way at the 649. And I've been mentioning this level for a very long time now. That, you know, the likelihood is that we're going to aim to close this cup at the, um, that major 646 range. Okay. Going to turn off the moving averages and Bollingers here for a moment, but you can see that the 200 mile is almost at the top of that red liquidity range, and we're just going to remember that. Um, but with the moving or with the 200 mile being at that top liquidity range, um, with us being in the lower Bollinger Day 2, we can potentially pull down all the way to the top of that liquidity range. Now, I am not expecting us to push down a whole lot further just yet, okay? The lower Bollinger Day 2, even though it can push into an extended day 3, where the day 3 acts like the day 2 over again, where it pushes into a lower low, it's not common at all, okay? Um, Again, the back tested, everything states that you focus on going long on day 2, okay, which would be Monday today. So with that day 2 mechanism in play, I do expect us to reject the 200 mile. Even if we do push down all the way to the 200 mile today, I do expect us to reject it. However, from that rejection, we should be pulling up towards the 5 mile, okay? And from the 5 mile, and we did talk about this movement almost to the T, okay? From the 5 mile, what do we expect to happen again? Rejection, okay? And from that 5 mile test and rejection, that absolutely would push us below that 200 moving average. Not only that, that would expand the Bollinger Band down to the point where we can continue pushing even further. For example, once we have our open tomorrow, the or the Bollingers are going to expand downward very, very drastically, but it's not going to be at the market price at all. Um, that means it's going to take some time to expand further downward towards this 646 range. That's how we get that expansion. We see the 5 mile reclaimed, retested, rejected, and from that rejection, we see the 20 mile start pulling down even further. We see the 10 mile pulling down even further. We see the 5 mile starting to pull down even further. We see the lower Bollinger expand further to the downside. And so we expect this, push downward, push up slightly, reject, push downward. Push up slightly, reject, push downward. And rinse repeat until this selling is done. Again, this is the opposite of a bull market. I truly do believe we're entering a bear market, and a lot of these selling days are really, really following suit to that, even compared to the major selling we had in 2025, even compared to some of the major selling we had in 2024. So I really do think that we're getting ready to see a major bear market occur. With that major bear market occurring, that means that going to this weekly time frame here, we could potentially be seeing all the way down towards the bottom of this major buying channel. Okay. Now, that's going to take time. This is something that would take potentially months. So just remember that the last time we had major selling like this, it took roughly about 2 months for us to push that whole level to the downside. Um, One thing I do want to show though, while we're on this, is that these were the previous Bank of Japan unwind events. Um, Even though we're having a conflict with Iran right now, we do see that the yen is continuing to drop very, very aggressively, and we're continuing to see the DXY push upward very, very aggressively, which are the two conditions you don't want if we're expecting an unwind basically. Or if you're not expecting the unwind to occur, those are what you don't want to see. But we're now at the levels where the Bank of Japan is going to start unwinding basically the moment this conflict with Iran is done. And we've had some messages that have basically stated that in the exact words, but they said that, they're very concerned over this uh, Iranian conflict and that basically they're pausing all of their current FX operations due to that, which means that they're pausing their unwinding. Um, we saw this happen in 2024, where oil, and this is going to kind of transition us into our next segment here, but I do want to show this really quick. And this is the USO, so this is the United States oil, basically per barrel. And this is what happened right prior to the major unwind in 2024, is that we saw the oil prices go from $71 a barrel all the way up to 82. Now, I know there was a conflict or something that was starting the spark of this, but I don't have the exact name of it right in front of me. However, the Bank of Japan had to wait until that conflict was resolved until they can really start unwinding positions again. With that happening, the Bank of Japan unwound almost immediately after. So let's see, this oil volatility ends on 7:05:24, and we see the major unwind occur on starts to occur on 7/11/2024. So, 4 days after it essentially. Did I say 7/4 or 7? I don't remember what day. You know, basically a whole week after that, or less. So it was hardly any time at all. Now, again, I want to show this correlation to the major unwinding in 2025. If I can scroll back to oil because I am a blind person. On. Okay. And we're going to turn off the drawings because I have something else drawn there for a different moment. Um, but let's see here. Okay. So when the major unwinding occurred throughout 2025, we saw that it basically started right when January happened. Well, what started happening prior to that? In December, basically right before Christmas, the price of oil was at 72.95 a barrel, and there was an event that happened, or there was a conflict that happened that actually triggered this volatility event, but the price of oil went all the way close to 85 a barrel. And from that, okay, we started to see the unwind. Now I want to show the SPY price, or let's show the FXY price first. We started to see that unwinding taking place. Okay, as of, let's see, literally started on December 30th. So 4 days after. Very likely that was over a weekend or something. I have to check the date. But 4 days after, we start seeing the Bank of Japan unwinding, 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 and then there is a pause, okay? And that pause occurs on March 10th. Now going back to the USO, apologize for the drawings, and going back to March, let's go back to March 10th. What do we see? During that time, oil is falling, 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 and then all of a sudden, March 10th, 2025, oil starts picking back up again. Okay. Oil goes from 70, basically 72 a barrel, up towards 78. Okay. Well, what happens to the unwinding? Well, going back to the yen, after that March 10th, when we see it pulled down from March 27th all the way until April 21st, we see the Bank of Japan unwind again. And what do we see with oil prices in that time frame? I can almost guarantee you see them pulling down. Let's see. No, this is when they were pushing up. So March 17th, all the way up until April 2nd. And then from April 2nd, you start seeing it pull down. So that correlates towards that pull down. Finishes the pull down on April 9th. pulls back up slightly, all the way towards that 21st, pulls back down, and then again, it's, okay. But what I'm trying to say is that not every single pop in oil will correlate to some massive sell-off within the SPY. However, given the current circumstances with where the yen is, with where the SPY is, with where everything else is that extremely likely the moment that this oil volatility is starting to pause, that we start to see this unwinding occur. Okay, and that unwinding is going to be very, very drastic. I know I had this segmented into a different portion, but I guess we're going to go over it now because I am already on it. This unwinding, again, super, super drastic. This red range is a super massive danger zone. Every time we've hit this red range, we've had massive unwinding, and the USD JPY is just getting ready to push up into that range very, very hard. Especially with this conflict, the longer this conflict goes on, the higher this is going to rise. So they are absolutely in dire straits for this conflict to end, and so that they can begin to unwind positions. Now, I do want to show the actual SPY here. Again, these are those unwinding events. This is the 2024 unwinding, the 2025 unwinding, and you can even see that pause in the selling during the March 10th. So March 10th, we see the selling pause slightly, picks back up, and on the 21st, that's when we see a little bit of a selling on the 21st, but that's really after that 21st into the 27th, you see the selling begin again. I wish I could show the correlation on the desktop. It doesn't allow me to on Webull for some reason. I will eventually get TradingView up when I actually set up my desktop computer. This is just my laptop right now, so until the desktop's set up, we have to work with Webull. However, I would love to show the actual correlation within the SPY, the yen, and oil, and you'd be surprised at how much the overall market responds to oil volatility. So a lot of what we're seeing right now is oil volatility, but it's also going hand in hand with a major Bank of Japan unwind. So that's why I'm saying I really don't think that we're out of the woods when it comes to seeing a massive, massive potential bear market. So um yeah, that's let's see what section we're covering here. Um yeah, so we're going over oil now. Okay, and that's what this next chart's for. Okay. So going over oil, we have broken some, massive major multi-year highs. Okay. The last time we were at this range, and I have this marked right here, is that this was a 2015 to 2020 consolidation range. This consolidation range broke um back towards the beginning of 2022. And from that level, we had that massive push downward. And from that push downward, we created a new consolidation range. Now, this consolidation range lasted from 2022 all the way until, basically as of current. Um, with that said, there's a major, um, basically cup built here to mess that up. I apologize. But with this cup built here and with this very, very important range of liquidity here, we're starting to push well above multi-year levels. Um, Technically, we're beating a decade level of fuel prices. Um, which is cool. Whatever, that's fine. I don't really care about that. What I do care about is that I don't expect this to hold very long. Okay. And that is something we see with these oil volatility events is that They do take a while to climb up there, but once they finally hit that peak, they drop like a rock. Okay. Every single time we see that, it drops like a rock. Drops like a rock, drops like a rock. And, you know, we can't time the conflict, obviously. However, we can time multi-year levels. And what are we seeing? We're well below a 10, well above a 10-year high. Okay. So is it a good time to start shorting oil? I think so. We had a failed cup right here, which this can allude into a very large bullish structure, but we'll go over that in a second. However, we now have this potential bullish cup formed here. Okay, this is the weekly time frame. This again has been a cup that has been building all the way since 2019. So, um, this is going to take a very long time to see it basically unbuild. Okay. Um, with that said, top of the cup has been reached. We should be starting to look for bearish structure at the top of this cup. Now, again, oil does not like to stay elevated very long at all. Whether this lasts, a few more days, whether this lasts weeks, whether this lasts months, kind of doesn't matter. Um, I'm targeting oil shorts for July, 2026. I believe those are July 17th, 2026. Um, and I'm just going to continue piling into those. I think that's a missed opportunity if you decide to not take that. Again, oil does not like to stay elevated very long, and it is above a 10-year level. Okay, this is not going to stay elevated for an extremely long period of time. Every time we've hit this 129.92 range, basically this 130 range, we've had massive rejections. We're currently above that in the overnight. We're currently at 133.78. So, can we be looking upward towards this 172? Potentially. But I don't think the Strait of Hormuz is going to be closed. I have been tracking the Iranian, uh, Navy very, very closely, and for the majority, a large portion of their Navy has been already, you know, basically taken out. Or they're to the point where they don't want the ships out in the open because we're going to take them out. But we've been taking out some of their massive, massive ships and really crippling their capabilities across the board. So I don't think this conflict's going to be extended for very long. This isn't going to be like where we had forgot his name, Al Khamenei or whatever. But when President Trump took him out in his first term, we had a lot of those attacks within the Strait of Hormuz for months and months and months, and that raised the oil prices for quite a while. That was really when that 2022 volatility started, and this is a much different event. Okay, we're absolutely um decimating their naval and maritime capabilities. We're really slowing down their their ability to launch missile attacks, and any form of retaliatory attacks. So while they have been talking very tough and very strong from just the logistics point of view and seeing their actual just missile launches and everything and their military capabilities, they've been slowing significantly. So I don't expect oil prices to stay elevated very long at all. Again, I am taking this dated outward for at least, 4 months. I would not suggest anything less than that. We don't know if this conflict is only going to last another week or if it can last for months from now. So we do have to be prepared for that. Okay. Um, but again, this is a major cup. From the cup's handle, or from the top of a cup, we should be expecting bearish structure or a handle. And from that handle, we should be expecting some major downside. We do have some major liquidity ranges that are very, very likely going to be broken here, and that's really what we're targeting is to start breaking back down into some of these major low liquidity ranges. There's a lot more to go into this with deflation and everything, but we could be entering into a massive, massive deflationary event due to the fact that oil has elevated so quickly. Um, and with that, it could absolutely push oil down to very, very low levels again. So I love the short up here. I think it's probably one of the better positions you could take in the market right now. Call me crazy. I don't really care, but I will be adding to that. So that's oil. And getting into precious metals, we're going to make this one very, very quick. This is the daily time frame. And on the daily time frame, we are below the 20 MA again. However, on the weekly time frame, we are retesting the 5 MA. So, am I expecting the market price to pull down all the way to the weekly 20 MA here? No, I don't expect that at all. I expect, um, generally when we have large market selling, we're usually going to be seeing a lot of weight pushed into precious metals, and we do see a lot of weight pushed into precious metals, especially during these Bank of Japan unwinding events. I would be holding my precious metals positions very, very tightly. I would not be entering anything short term, excuse me. I've been saying that now for quite a while, and I stand by that. You don't want to be messing with the consolidation too much, but entering into longs in terms of equity positions, they're super strong here. And we can actually see this within gold. And I want to go to gold specifically here, not the gold ETF. I want to go to the gold futures, turning off the moving averages, but just showing the Bollingers here. Is that on the daily time frame, again, it looks bearish here. It looks like we could be building a head and shoulders to be pushing downward. But what's the downside here? Are you going to push into the lower Bollinger and then from that lower Bollinger buy our way back up? Potentially. So we have potentially on the daily time frame on gold, the downside of about 4,900. So down $200 an ounce. Not really a big deal. Weekly time frame, however, we have a ton of upside still. We still have the upper Bollinger above us, which is basically at that 5,500 range. We have not pushed the upper Bollinger for a few weeks now. While we don't exactly have to push that again for a few more weeks, I would be looking towards that upper Bollinger range again rather than towards that 20 mile range. We haven't tested the 20 mile in quite a while, but the conditions overall aren't really telling me that we should be testing the 20 mil. Um, I would be expecting this to turn into a support rather than a resistance. So overall, I am still bullish on precious metals. I would not be trying to liquidate those positions at all. Um, EDL over uh, precious metals as well have been showing us an increase into the funds. So that means money has been moving into these ETFs overall. So very, very likely the dealers are going to be trying to buy the dip and from that dip trying to jump from there. Now, even in the overnight selling right now, the gold ETF is just on the daily time frame retesting the 20 mile, which is perfectly reasonable. From that 20 mile retest, we should see a consolidation back up to the 5 mile and a 5 mile retest. And from that 5 mile retest, we can either start, really having a dump downward or reclaim some support towards the upside, which again, I am bullish on precious metals overall. I do expect the upside to be reclaimed Now, treasuries very, very quickly, and going over TLT here, I have been personally buying this 20 mile range. I think it's very, very quality. However, we can see treasuries push down into the lower Bollinger on the daily time frame. That would mean we would see around the 87 range. Currently in the overnight, we are at the 87, 83, which is slightly above that lower Bollinger range. So another about 60 cents down, and we would push into the lower Bollinger. From the lower Bollinger day one, we would expect a lower Bollinger day two push. From the day two push, we would expect to start reclaiming support again. Now, this is a cup. Again, cup is a bullish structure. From this bullish structure being built, if we do push down to that lower Bollinger with the day two expecting to see buying towards that upside, that upside consolidation, this would create that cup and handle. Okay. With that handle being formed, that would give us again another buying indicator towards the upside that this is just forming liquidity to buy that upside. On the weekly time frame, we're seeing the 20 mod tested, which we have not seen tested to the bullish side for quite a while. We were trading underneath it on a bearish side for a little bit, but now we're starting to see it tested on the bullish side, which that's a good thing. You do want to see that when you want to push upward further. So I am buying this range. If we push down further, I will be buying into that. The expectation would be to have that bounce from the lower Bollinger Day 2, retest the 5 mile, buy the 5 mile retest, and start pushing upward. Okay. I want to turn off the moving averages and Bollingers here and show the horrible drawings we got going on. However, this is that cup and handle forming. It rejected right where we were expecting a rejection, and this is moving exactly how we're expecting it to move currently. This is a larger cup and handle. So with this nested cup, this is all bullish structure. This is very much alluding to pushing upward, especially with us having the potential Bank of Japan unwind event after this oil volatility. Again, this was absolutely starting to fly until we saw the oil volatility occurring. Once the oil volatility starts to slow down again, we can expect the long end to see some very, very massive buying. So I'm extremely bullish on this right now. I'm even more bullish on this right now than I was back when we bought that first lower Bollinger, and even back when we saw the second lower Bollinger move, see massive buying. Um, I am, hold on, I want to check the actual contracts I'm in. I believe they're for July 17th, but I want to double check. They're for June 18th, the 92 calls. Okay, so that would be the breakout from this cup and handle, breaking into that massive liquidity range, which would allude to pushing back up towards that 95, 96 range. So those contracts, um, just pricing them out very quickly, or doing the calculator, assuming that those hit in April, let's just say April 12th. And let's say the price moves up to 92 in that time. Okay, so 92, hold on, 92. That would give those contracts a whole 101% upside from the current range. Sorry, my daughter walked in here. That's really for TLT right now, though. Again, we can be seeing, come here, baby. We could be seeing the downside a little bit further, but I am buying this range. I do fully expect. Hold on, hold on. I do fully expect us to see upside very, very soon here.
Okay.
So with that said, let's go ahead and jump into what's the last thing on our list here? Here, can you read that? Say Bitcoin. Say Bitcoin. There you go. Good job. Okay, we're gonna go over Bitcoin. All right, and quickly jumping into Bitcoin because I really don't want this video to last all night. I know I was going to cover a little bit more, but we'll go over that in tomorrow's stream or in tomorrow evening's video. So, we're just going to very quickly go over Bitcoin here. It decided to fly away. Okay, so there's a lot going on my screen. We're going to turn off the Bollinger and moving averages here so that we can see what's going on. Daily time frame, we have this major inverse cup that has been completed. The inverse cup's handle has been completed. So this inverse cup and handle has played out. Okay, we are now within a new chunk of liquidity here, which we've been basically consolidating in for the last month. From this range, we were either going to have a major bounce to the upside from this 74.40 or, the 74,000 range, but we didn't. Okay, and now that we're having a major market sell-off, it's starting to create the conditions where we can be pushing down even further. That's why I have this aptly drawn head and shoulders, and currently we are building out this right shoulder. The likelihood is that we're going to finish out this right shoulder, and from completing this right shoulder, we will finish out this inverse cup to the downside. That would pull us back all the way to this 60,000 range. Probably slightly less than that. And that's really where I'd start trying to target a long position. However, we have something even larger, not that, something even larger starting to loom here, which I want to go to the weekly time frame to really show this. And we're going to make this a lot brighter all of a sudden. But it's this very large inverse cup here. And this inverse cup takes us all the way down to the 49,000 range. Okay. Now, generally, I wouldn't expect us to go all the way down towards that range. Um, However, if we break this major buying channel, which has basically been since we hit that $15,000 dollar low, um, if we break this lower buying range here, that's going to tell us that we will be heading to that 49,000 range and that we are within this extremely strong blue selling channel. So it's hard to be bullish on Bitcoin right now when we have a lot of conditions within the market that are telling us that truly we're shifting out of crypto. We've been doing so since late last year. And with that shift out of crypto, we're also starting to see that, there's some major selling conditions that can occur within overall equities, especially with this Bank of Japan unwind. And I do want to show some of the previous unwinds. See what we got going on here. I'll go to the daily time frame. And let's see, I believe this was the 2025 unwind here. Okay, and Bitcoin went all the way from 98,000 down to that 74,000. So pretty large unwind. Then we had this one where at the end of July, so it was all the way right in that range. Bitcoin dropped from 70,000 all the way to that 49,000. So both of those unwinding events, Bitcoin saw some massive, massive downside. Now, we've been seeing massive downside here, and the unwinding hasn't even started yet. Okay, so um, if we're going to be seeing the Bank of Japan unwinding positions, then potentially our downside is very, very large. Okay, um, so that's Bitcoin. Not that I've really went into any form of how to trade this in the current. I'd be waiting for that right shoulder and trying to short that right shoulder. Um, Other than that, I would not be trying to buy the upside in Bitcoin right now. I think that the downside is very, very, very large. And I think as soon as this oil volatility is done, that we're going to see this really start to dive towards that 49,000 range. So, um, it's not looking good. But if we have a massive bounce back up to the 74,000 range, then that would tell us something a little differently. But the last time we went up to that range, we rejected it, which is, a major indicator in within itself. So, okay. That's gonna be tonight's video. Let me just very, very quickly hover back to the SPY. I do want to go look at the hourly time frame. Apologize for all the drawings. This is from last Friday when we were going over the scalps. How I said that, potentially this was very, very likely going to turn into that very large double top. Many people were saying, oh no, it's going to be that inverse head and shoulders. I didn't see the inverse head and shoulders really forming. I was seeing a lot of selling, a lot of selling signals occurring, and lo and behold, we have the selling, we have the gap down, and here we are, lower Bollinger Day 2. Um, from the lower Bollinger Day 2, again, we've already claimed our lower low, so should you wait to sell your puts too much if you're going to be selling short-term puts on the open? Um, don't wait too long. Generally from the lower low of the day two bottom Bollinger, you generally don't see a whole ton further downside. Um, and just based off of the structure we have going currently, I agree with that. Um, but yeah, we'll go over it more in the morning when we look for scalps and whatnot. So, okay, that's going to be tonight's video. Sorry for the long video. I hope y'all enjoy. I hope y'all watch it and share it with someone who also enjoys watching stock related stuff because I am trying to slowly grow the community. Anyway, with that said, have a good night, trade safe tomorrow, and I will talk to you in either the morning or tomorrow night's video. Take care, everybody.